All right. Hello, everybody, and welcome to JWB's Property of the Week. I'm Greg Cohen, and today I'm going to walk you through my recommendation for the Property of the Week. And if this is something that you're in the position to start investing in rental properties or maybe continue to invest in rental properties, this is definitely one that I think would be an excellent property for you. And if you're in the position where you're just learning about how to invest in rental properties, this is going to be a great exercise because this is an opportunity for me to break down the property, talk about why it's a great investment and what you should look out for when you are making your decision on your rental property. So hope you're excited. We're going to go over this property of the week. And this is something I do every single week. I actually reveal a property of the week on Thursdays in our Not Your Average Investor show. We do it every Thursday at 12:30 Eastern. And we had about 50 of our investors on the call yesterday. It was a great call, just so many questions from the beginning to the end. And that's the real value for you, is to be able to ask those questions and put yourself in the hot seat to be able to make the decision, even if right now isn't the time. So if you want to join us on the Not Your Average Investor show every Thursday at 12:30, go to jwbshow.com. You can register. It's free. And we will join. Well, we will see you there. But today, we're going to talk about this property on Wilson Boulevard. So let me bring this property right up on the screen here. And as I'm doing that, I've got my phone here logged into the group here. And so for any of those who are joining live on Facebook Live right now, it's great to have you. And if you'd like to throw some questions either now or on the replay of this, feel free to do that. I'll make sure I jump back in there and answer those questions for you. But first, let's start taking a look at Jacksonville overall, and I'll kind of guide you as to where I'm putting you for this property of the week. This is Jacksonville overall, as I mentioned here, and just give me a second here to make sure I'm showing up the right way on our group. You never quite know when you go live sometimes, so if anybody would like to just let me know that it's coming through. There we go. I can see us now, so I know it's coming through. So if anybody would like to say hello, it's really great to hear from you for those who are watching live. So I appreciate all of you. But what we're looking at here is a map of Jacksonville. And all of these blue markers are all of the properties that JWB has either built or renovated for our clients over the years. We've been doing this for 15 years. There's over 2,000 properties that have been purchased by our clients that we, of course, do the management for. There's over 3,600 properties that JWB does the property management for all of Jacksonville. And this is a great visual representation of where we want you to invest, where you should be investing for cash flowing rental properties in Jacksonville, Florida. And this is where I invest with my own dollars. This is where we've built our own rental property portfolio. So it's nice for you to know that we put our money where our mouth is. And so where we're going to be focusing today is the west side of Jacksonville. Oh, I went the wrong way. We're going to be focusing on the west side of Jacksonville. So for those who aren't familiar, this is the Atlantic Ocean. This is the St. Johns River. This is downtown Jacksonville right here. And the west side of Jacksonville is right over here. This is I-10, Interstate 10. This is the St. Johns River, as I mentioned. So west of the St. Johns River, south of I-10 is the west side of Jacksonville. And we love this area. We've been investing here, as I mentioned, for 15 years. It's one of the 4 neighborhoods that we love for cash flowing rental properties here in Jacksonville, Florida. So I go in a little deeper here. You can just see the amount of properties that we have built, rented, or built, renovated, and continue to rent out. This is how we know that we're going to be able to perform for this client. I mean, this property right here is surrounded by data points of what rents should be and how to market for your residents and to make sure that this is a successful investment for you. That's one thing you want to look for when you're investing in rental properties, especially with a turnkey rental property company. They need to have a track record of performance, and that's what you kind of see here. So this home is the one on Wilson Boulevard, and let's take a deeper dive on the numbers of that one. So here we have 3700 Wilson Boulevard. The first thing that I always want you to take a look at is the return on investment. And when we're talking about returns on investment, I'm always going to quote them based on you purchasing with conventional financing. And so the way that those numbers shake out is we're going to be able to put investments in front of you that perform at a 9% estimated return on investment. or higher. Really, 9 to 11% is where the market is bearing right now. And so anything over 9% is a win when it's a passive turnkey rental property. And that's one of the reasons why I love this one here on Wilson Boulevard. We're at 9.32% estimated return on investment. And the reason that estimated return on investment is the first place I want you to look is because that takes into account all of the important factors that affect whether or not this is a good deal, right? It's going to take into account your purchase price. It's going to take into account your rent rate. It's going to take into account your property taxes, property insurance costs, property management fees. And that's really the best way for you to direct where your money is going to go. For you to be a good steward of your money is to look at the estimated return on investment. Monthly cash flow is what you're going to experience as far as net positive cash flow coming to you on a normal month. Normal month means that the home is rented and we take out your principal and your interest and your taxes and your insurance cost and your property management fees. And what are you left over with? And that, in this case, is over $200 a month, which is a win. And that's one of the reasons why I love this home. Just running through the numbers here. As you can see, this is a home that it's a newer home, but it is a renovation. It was built in 1995. And so you can see it's a little bit newer here, but of course, not brand new construction. And for us, we love both brand new construction and non-brand new construction. We love both of them because they both can play very well for returns, and we can get them both to between 9 to 11%. And so this home built in 1995 is right in our wheelhouse here on Wilson Boulevard. Take a couple of quick looks here at the price and some of the other key elements. If I can figure out exactly how to maneuver. There we go. All right. So on Wilson Boulevard, we've got a purchase price of $180,000. That's pretty typical. Your renovations will really be priced somewhere around $150,000 to $180,000. That's the sweet spot. So you are right there. It's 4 beds, 2 baths. It has a 1-car garage. And the market rent for this one is $1,275. Now I'm going to share something with you in a second about this rent credit that is going to be sent to the buyer at closing. Which is really interesting and something to pay attention to. It will have a dramatic impact on your return on investment. But the market rent for this one is $1,275. And I'll get to that in just a second. Property taxes are on the low side, $2,380. Your homeowner's insurance costs. So something to take into account here that, people often ask, what are the differences between new construction and renovations? Well, I love them both. I have them both in my portfolio, and they can both get to 9 to 11% returns, but it's just about how you get there. On new construction, you're going to have slightly higher home prices, right? You're going to have lower homeowners insurance costs, and you're going to have higher property taxes as well as lower maintenance costs. So higher purchase prices, higher property taxes, lower insurance costs, and lower overall maintenance costs. Now, when you have a renovation, you're going to have lower prices, you're going to have lower taxes, higher insurance costs, and slightly higher maintenance costs. And you shake all of those things out and you get to between 9 to 11%. That's why we love them both. And so for this one, as I bring the screen share back, what you're going to see here is $994 for an insurance cost. Well, that's because the home isn't brand new construction, and you do see homeowners insurance costs in the $800,000, $900,000 range when you don't have brand new construction. So that's going to offset some of the other things like your property taxes, which are on the lower side, and your purchase price, which is on the lower side. And for us, we just need to get 9 to 11% in a growth market like Jacksonville, in a neighborhood that we want to be at. And that's a win. So that's why this is one that I certainly love for your portfolio. So I want to take a moment and just describe something that is unique. It's not very often, but it's something that has a dramatic impact on your return on investment. And it's included in this property for the client that purchases this property. JWB is giving the client who purchases this property a $5,400 rent credit at closing. So what that means is the buyer who buys this property actually is going to get a check at closing for $5,400 as a rent credit. Now, why on earth would JWB do this? Well, I'm going to walk you through why it makes sense for JWB, why does it make sense for you as the client, and then why does it make sense for the resident? So every so often, JWB will acquire a rental property that has a resident in it that does not need work currently. It is in great rental shape. We have a great resident that meets our standards. And so the worst thing that we could do at that point is kick that resident out and then start this whole process over when it's just really not necessary. So what we do is we look for a better solution for everybody. We want to make sure that the client is set up to earn great returns. And that if we have a great resident, that we don't disrupt that great living situation, because ultimately we want to get great residents in your home and keep them there for forever. So what we do in that case, well, I should also add that sometimes when this happens though, the rent that the resident is paying is not market rent. And so that could create an issue for you as an owner. Well, that's the case here for this house on Wilson Boulevard. The home right now is not rented at $1,275. It's less than that. And so what JWB does to make this a win-win-win for everybody is what we do is we give a rent credit to the buyer good for the next 2 years of the lease, meaning that the difference between what it's rented out for now versus market rent for 2 years is that rent credit that we're giving at closing. That's $5,400. As I mentioned, this is not normal. This is the only time in any of the properties of the week that one of the properties has had this component, so it's not normal. And when it happens, it's a great thing for everybody. For you as an owner, you're going to get $5,400, which is going to equal the next 2 years to make sure that you really did get the market rent. The other thing that we're going to do is we're going to make sure that that resident stays happy. And hopefully that resident stays there for a long time. Now, as that resident renews the rent, they need to get up to market rent. So you are protected as the owner beyond 2 years. We're going to step them up to get to market rent if they choose to stay. And then if they choose not to stay, what JWB does is commit to the buyer that we actually are going to cover the first property turn. And so this is a strategic way that everybody can win, because the client who owns this property, who purchases this property, is going to start off with a large rent credit coming to them. And in the event that the tenant does leave, the resident does leave, they're going to be protected because JWB is then going to commit to doing that first property turn cost. And we got a great situation where we have a great resident in a great home that can be turned into cash flow positive from day one for you as the client. And of course, JWB wins here because we have a happy client, a happy resident, and the ground is set for hitting those return expectations that we put in front of you. So that's how this goes here at 3700 Wilson Boulevard. I found out that this home was actually put under contract. Just yesterday, I found out that it was put under contract right before our show. And so this one has actually been purchased by a client, which is incredible. Super happy for that client. And I'm super happy for you too, because the same thing that we do here on Wilson Boulevard is what we do over and over and over again. You saw that map where you saw all those blue markers in the neighborhood right there around Wilson Boulevard. Well, if this property interests you and the fundamentals make sense for you, then we have literally dozens of properties just like this one that would fit for you. So if it's something that you're interested in and you're already a JWB client, reach out to your portfolio manager and we'll get the wheels in motion to find the right property for you that will be very similar to this one on Wilson Boulevard. And if you're not a current client yet and you want to set up that conversation, you can reach out to me. You can reach out to my team. The best way to do that is to go to chatwithjwb.com, chatwithjwb.com. You can schedule a time to speak with my team. If you have any questions, you'd like me to facilitate that call for you, just drop a note in the comments and I'll be there to be a resource for you as well. Hope you all have a great day and happy investing.